Namaskar and thanks for joining us on this week's Economic Brief, where we look at some impactful economy-related news from Indian shores. On the program, India's GDP surged 8.2% year-on-year in the second quarter. That's the fastest pace in a year and a half and well above expectations of around 7%. Australia unveils a new national AI plan to shape its AI future. It has three priorities: investments, skills boost, and a $30 million AI safety institute. This is to grade tech as well as to monitor risks. Michael and Susan Dell pledge $6.25 billion to expand the Trump Accounts program that will fund 25 million children in low-income areas. And M. Pumalanga's abandoned mines, they fuel survival amid 34% jobless growth or jobless rate in South Africa's coal heartland. Well, before we move on to our first story, which is our main story, let's listen to Commerce and Industry Minister Piyush Goyal. He is highlighting India's huge growth potential and expected growth trajectory along with aims for 2047, and he was speaking at the India-Russia Business Forum in New Delhi.
We expect this in the next 2 or 3 decades to continue as we grow from a $4 trillion economy today to a $35 trillion economy over the next 22 years by 2047, when we celebrate 100 years of independence. Friends, despite all the global headwinds, India and our economy has demonstrated tremendous ability to withstand headwinds, shock, challenges. From a fragile 5 economy barely 11 years ago, we are today amongst the top 5 economies, soon to become the world's 3rd largest GDP.
So let's put Minister Piyush Goyal's words into context, and we can do that by looking at the GDP growth figures that came in for Q2 in India, and they are quite phenomenal. The GDP was up 8.2% year-on-year in Q2 of FY26. This is the fastest growth in 6 quarters. So that has beaten expectations, which were around, the 7% mark. Let's break this down a little bit more. We'll go into some detail on our next slide. We'll look at why this is happening. And we can see that this is happening because manufacturing output has grown 9.1% year-on-year. Now, manufacturing has grown, and that we have seen constantly because there is demand for that manufacturing. And this is boosted by factory production and GST cuts, as we know, and hence that consumption has resulted in manufacturing increasing. As we said, there's a strong demand outlook which has boosted business confidence. And if we look at manufacturing a little bit, we can see even in the IIP figures that had come out recently, which didn't look too good, but infrastructure and construction grew at about 7.1%, and capital goods also grew at about 2.4%. So we can see that there has been a lot of investment which is yielding results. Moving on to our next slide. And in services, we can see that services is actually what drives the Indian economy. Services contributes about 55% of India's GDP currently. It is by far the largest contributor and also a significant contribution of India's exports. And financial services and real estate are seeing near double-digit growth. IT and business services have always remained resilient. These, in fact, are the strongest sectors. IT, business services, these are also areas in which India is exporting services. And the largest contributor, as I said, which is about 55% towards our GDP. In fact, 55% of the GVA in 2025. Industry had contributed 27%, agriculture 18%. Services is really India's growth engine. Moving on to our next slide. So here we are looking at some of the reasons for consumer spending, and there's been a rebound there. We can see that the GST cuts and also lower prices as a result of that, and costs have come down, and rising disposable incomes, which has all been fueling this demand. That is the reason why even Fitch has seen a significant upward revision in its forecast for India and its growth outlook, and is now forecast 7.4% from 6.9%. So significantly because of the strong demand factor, the domestic demand. Retail and FMCG sectors also are showing solid momentum. Moving on to our next slide. And here we are seeing that there has been a strong infrastructure push, because this is the real reason. The multiplier is coming from here. The capital goods investment, the capital expenditure of the government of India is significant, of the order of about 11 lakh crores. So within a quarter, it would be roughly about 3.33 lakh crores, or that would work out to a huge amount of money, maybe about 33 billion or 34 billion dollars thereabouts. So that is all going into within one quarter into the infrastructure sector, roads, railways, energy. Public investment has been crowding in private investment. Construction activity has accelerated nationwide. This is also one of the reasons, the underlying reason for the growth. Moving on to our next slide. And we are seeing that despite the tariffs, merchandise services exports were up about 4.8% between April and October 2025. And IT services remain strong because there is always demand for quality IT services, which India is providing, and also at reasonable costs. So the cost advantage, the comparative advantage continues to work in IT services for India. Export diversification has also helped because we are looking for significant new markets and finding them as well. That is why we are seeing a reasonable growth as well in exports. Inflation has remained, moving on to our next slide. Inflation has remained manageable. In fact, CPI inflation is at a record low of 0.25% in October of 2025, and the real purchasing power has basically been increased because inflation is low. And there we can see that the labor force participation also, this is another significant contributor. It has risen to 55.4%. So a large amount of labor is active in the economy. And what are the broader implications of all this? We look at that in this slide, and this is our concluding slide. So we can understand that, what does this imply? It says that India is remaining the fastest growing major economy of the world, and the growth is fueled by manufacturing and services alignment, also sustainability, and this depends on global demand and ongoing reforms. So this is what we were talking about, and now let's move on to our next story. We are saying that India will continue to remain as the fastest growing economy based on these figures. So Russia's Deputy Chief of Staff of the Presidential Office, Maxim Oreshkin, also spoke at that India-Russia Business Forum where we heard Piyush Goyal speak a little while earlier. And he highlighted India's rapid rise as an economic power and also praised the policies adopted by the Modi government in promoting economic growth. Let's listen to him.
We see what significant results the Indian economy achieved over the recent years, becoming the most quickly growing economy of the world. The figures speak for themselves. Average annual growth of GDP over the recent 5 years is exceeding 8%. And understand that the current speed of development became possible through targeted policy of the government of India, headed by Prime Minister Narendra Modi. India is a significant player in global trade and is part of the group of the largest international exporters of products and services. India achieved significant, meaningful results in industrial and technological spheres and is, for instance, the leading vaccine generics producer in the world.
Well, some important points being made there by the Russian Deputy Chief of Staff of President Putin's office. Now, Anil Padmanabhan, senior journalist with around 40 years of experience commenting on economic affairs, joins us. So let's ask him a few questions. Mr. Padmanabhan, Fitch too has raised India's GDP forecast to 7.4%. How deep is the consumption appetite that's driving growth within our country?
See, Mark, that's the most positive thing that we have seen is the pickup in consumption. So we saw a big sugar rush post in October in the festival season, largely inspired by the fact that the government had slashed the GST rates, which laid the basis and foundation for that big burst. But now we have to wait and see whether that sugar rush endures or consumption just picks up to normal levels. But definitely consumption is the best part of the Indian story right now. And we are seeing green shoots of investments also picking up.
So what needs to be done then to sustain the growth? People keep focusing on the rupee value falling as well. Is that a cause of concern?
Mark, see, the rupee is a very interesting story. We have a very strong economy at this point. All the macro fundamentals are extremely good, yet the rupee is depreciating. So it begs the question as to why. There are several reasons. Most of them emanate from the external sector. One, the fact is that the US has imposed 50% tariffs. So it has impacted India's exports. So our trade deficit has gone up. Secondly, the foreign institutional investors have been winding down their investments in India. Not the entire amount, but the usual pattern is that till December they take their money out, and by February, March they start bringing it back in. That's another aspect. So these have led to a kind of pressure on the rupee.
And Australia has unveiled a new national AI plan. It's designed as a roadmap to guide the country's AI future. It focuses on capturing opportunities, building skills, and ensuring safety. The measures to boost these priorities mark a bold step in positioning Australia as a front runner in applying the tools of the AI landscape in policy.
Australia has launched a new national AI plan on December 2, 2025, a roadmap to guide the country's AI future. It focuses on capturing opportunities, building skills, and ensuring safety. The plan rests on three priorities: investment, strengthen domestic AI, attract global capital, expand data centers; skills, boost AI literacy, expanding training, prepare workers for future jobs; safety, establish a 30 million AI Safety Institute to test technologies and monitor risks.
It is directed towards three national interest priorities. Firstly, making sure that Australia captures the opportunity, the economic opportunity, the productivity opportunity, making sure that we're making AI technology here, as well as taking the best of artificial intelligence technology into Australia to do important national interest things.
Australia is taking a lighter approach than the EU's strict AI laws. It will rely on existing rules, privacy, consumer protection, and competition, while promoting voluntary guidelines and sector oversight. The goal is clear: encourage innovation with guardrails. The vision is ambitious: build a world-class AI ecosystem that benefits all communities, driving adoption in healthcare, education, public services, and industry, and positioning Australia as a global AI hub.
It's about making sure that we keep Australians safe. That's why we announced the AI Safety Institute, a capability at the heart of government that's about testing new models, analysing threats and challenges, working across government with our regulators, our security and intelligence agencies, our financial regulators as well, to make sure that we keep Australians safe and evolve our approach to this technology in the national interest.
Looking ahead, the AI Safety Institute will launch in 2026 alongside school and government pilots. Australia's roadmap signals readiness to embrace AI with confidence and pragmatism, focusing on opportunity. At its core, the plan balances innovation, skills and safety while keeping regulation flexible, a bold step toward shaping the nation's digital future. The Economic Brief, DD India.
And Anil Padmanabhan continues to be with us. Let's turn to him once again on this story as well. Mr. Padmanabhan, India is going to be hosting a major global AI summit in February next year. So how do you view policy evolving in this sector?
Mark, the Australian case is a nice template for every country to adopt. It's a basic template. They have ticked all the important boxes. There are several countries who have similarly embarked on this journey. Now, coming to the conference, I think it's hugely significant because it is important for India to take the initiative in all these new trends, whether it is in the Solar Alliance, which India led along with France, and now with AI, where again India is collaborating with France. So it's very important because what happens is whoever takes the initiative sets the rules.
Right.
And AI is a completely new technology. It is a game-changing technology, and it has huge upsides and similarly massive downsides. Deepfakes are some very easy references to share with you. Similarly, cyber attacks using AI, etc. So you are looking at a very difficult world ahead. So one, the nation has to be prepared, and second, the world rules in tackling downsides to AI and also in the manner in which we exploit AI. India should be at the leadership table in this. So the upcoming conference is a very important point to where India needs to signal its intent.
So how quickly then is the world actually adapting to AI? And you have clearly indicated that, in opportunity terms, there is a cost involved in not getting onto the bandwagon fast enough. So you think that India is already on that bandwagon?
Oh yes, Mark, but the thing with AI as a technology is that you will always be playing catch up, particularly regulation and oversight. But the good news is that India is cognizant of this. It is taking some kind of rearguard action and preparing for the future, just like Australia's case you cited in the introduction. Similarly, India too is taking similar measures. The point about AI technology is it is still emerging. We still probably don't know the depths and the capabilities of AI. The world is actually, as a unit, trying to figure this out, in a bit by bit. So it's a step by step, but you need to be prepared. Forewarned is forearmed, as they say.
We leave it there. Thank you very much, Mr. Anil Padmanabhan, senior journalist with 40 years of experience in covering economic affairs and international affairs. Thanks for being with us. Moving on to our next story. America's newest child investment program is getting an unprecedented boost, this time from one of the country's richest tech families, Michael and Susan Dell. They have pledged billions of dollars to expand the so-called Trump accounts, which offer millions of children in the United States financial stake in the country's future. But the plan is tied to a widely debated spending bill, and it's already sparking both praise and political scrutiny. Diptanshu Kashyap reports.
A landmark philanthropic pledge is set to reshape America's newest child investment program. Tech billionaire Michael Dell and his wife Susan are donating $6.25 billion to help fund Trump accounts, or government-backed investment funds created under the One Big Beautiful Bill Act. While the Treasury will deposit $1,000 for children born between 2025 and 28, the Dell's money targets those born earlier, providing $250 each to at least 25 million children aged 10 and under, mostly in the middle and lower income zip codes.
Michael and Susan Dell are committing to one of the largest private donations in American history, which will directly benefit the next generation of American children through the new Trump Accounts program that we created in our One Big Beautiful Bill. And Michael and Susan came to see me along with Brad, and they said, this is an idea. And I said, I think, it sounded just so good and so unique.
The Trump accounts are designed to give children a long-term financial foundation. Each account will be invested in index and mutual funds, tracking the broader stock market, and withdrawals will only be allowed once a child turns 18. Parents will need to file a new IRS form to open an account with private contributions capped at $5,000 a year beginning in July 2026.
We believe the smartest investment that we can make is an investment in children. And this act has created a platform for families and friends and communities and companies and philanthropists to contribute to these accounts to create a savings and opportunity and hope and prosperity for tens of millions of children in this country.
The pledge has drawn widespread attention, with supporters calling it one of the largest private contributions to American youth ever. At the same time, critics note the broader Trump Accounts program is politically divisive. Some argue it adds complexity to the US savings system and could deepen the national debt. Nonetheless, for many families, the donation represents hope for a tangible stake in the country's economic future.
For millions of American families, the Trump Accounts initiative represents both opportunity and uncertainty, a promise of early financial security set against a complex policy and political environment. As the program rolls out in 2026, the question remains whether this mix of public funding and private philanthropy can broaden access to long-term wealth. The outcome could shape not only children's futures, but also the nation's broader debate on economic mobility. In New Delhi with camera person Saurav, this is Diptanshu Kashyap for the Economic Brief, DD India.
Well, South Africa's shift away from coal is exposing deep economic tensions in one of the country's most vital regions, the Mpumalanga abandoned mines. They have in fact become the only source of income for thousands who are locked out of formal jobs, even as the province powers most of the nation. Now, as the government pushes a multi-billion-dollar green transition, communities fear that they are being left behind once again. We leave you with Diptanshu Kashyap's report. Thanks very much for watching the Economic Brief.
South Africa's coal heartland is facing a widening economic fault line. In Mpumalanga, the province that generates almost 80% of the country's electricity, abandoned shafts have become lifelines for thousands shut out of formal jobs. With unemployment at 34%, young men spend their days in pitch-black illegal tunnels, supplying coal to nearby communities that cannot afford electricity. And despite powering cities across the country and abroad, locals say the wealth has rarely reached them.
These things we're doing here is playing a big role to the communities, because this coal, we transport it from here to communities. So those people, they used to cook, to make it warm themselves.
This parallel coal economy highlights the contradictions in South Africa's clean energy transition. The government calls these workers illegal miners, but they see themselves as filling a basic need. Analysts estimate more than 40,000 such miners operate nationwide, compared to over 100,000 in the formal coal sector. And even with a $8.5 billion transition plan on the table, many in Mpumalanga fear that they'll be left out again, just as they were during decades of large-scale extraction.
So for us, just transition means transitioning from large-scale, destructive extraction form of mining into a sustainable, artisanal and small-scale mining sector. That is to ensure that no one is left behind, especially the informal sector, the historically disadvantaged South Africans who have never been given an opportunity.
But formalizing artisanal mining remains out of reach. Permits, land access and environmental approvals can cost nearly 3 million rand, far beyond what small community groups can afford. Activists warn that unless these miners are included in future plans, South Africa risks replacing one unequal system with another, sidelining the very people who have lived off its mineral wealth for generations.
For the communities of Mpumalanga, the debate isn't just about energy, it's about economic survival as well. As South Africa moves toward cleaner energy, the challenge is ensuring that this transition doesn't leave behind those who relied on coal much before the big investments arrived. Whether the country can balance sustainability with equity will ensure not just the energy future, but the economic future as well. In New Delhi with camera person Saurav, this is Diptanshu Kashyap for the Economic Brief, DD India.